Okay, week commencing 23rd analysis. So this is actually quite similar to last week. Um, Last week analysis was pretty much uh, pretty much correct basically. In terms of drawn liquidity, well, it's just that it was just really slow, so slow that we had SMT just failed to pick out another range like that, or did. You'd also notice, um, oh yeah, sorry, the SMT. So as a result of that, this is an inside week. Just managed to close outside, so outside week. Um, but like I said, drawn liquidity hasn't changed. Still, we're looking for these equal highs on the weekly. Small daily fair value gap still left open. Volume imbalance pending as well. Look out for this. First, sorry, look out for this for a small reaction. Previous weekly high. Managed to puncture that. This one's still intact. We can see here. This weekly low. Right there. Okay. Well, technically here now. Might as well just move it here. This low as well. This here. The equal lows. Again, in line with our analysis, we're looking for risk off this week as well. Have a quick look at our economic calendar, see when we can expect weekly accumulation, manipulation, and ultimately the distribution. So, as you can see, nothing really on Monday. This can move a little bit, okay? Nothing much on Tuesday. Therefore, I would say S&P figures, potentially causing volatility. Wednesday, these might cause it to move a little bit. Thursday, again, some movement, some movement here. 130, and finally Friday, again 130. We have movement, and same here. But like I said, nothing much, nothing major gonna happen that we should expect to happen. Okay, so mostly a easy week. Hopefully, now that we had a shitty correction in this week, extremely slow price action, one of the worst I've dealt with. It just refused to move on the euro. We should now easy up a little bit. Normally that happens after a low range week, you get a high range week. You saw it here. Accumulation, distribution finally. After the manipulation. Drawn liquidity here. Intermediate resistance might be faced here depending on the time of the day. And if you're looking for counterparty support ideas, then you can see here that the 4-hour range that I highlighted, we didn't even go to the 50% of that. Stayed above that, which is a good sign of bullishness. Now I am interested in a new range, which being low to high. So this fair value gap has a very key role in this, as in if we close above this for the most part, then that's very relevant signature that we're gonna have a very good price leg up, bullish, that will take us into the the high of this week slash the leftover parts of the fair value. In terms of your premium to discount, 50% literally is at the high of this fair value gap. So order block wise, the daily, this can be a relevant signature. So can these two 1 hour order blocks here filter it down? Might be relevant here as well. Okay. And then of course, if you go here, then these two weekly lows are really close, equal lows now. So they have a lot of liquidity under them. Counterparty wise, we have this, and then we have our new range basically from the high to the low, small fair value gap here in premium, order block here as well, I guess. These two order blocks here, these green ones are more relevant, just like these ones here, because they're in premium. So that's our counterparty wise I'll be looking at. Start of the week, I'm most likely gonna aim for this CB, this high of the Friday, and this fair value gap mainly. And this is probably as high as I'd go for my long ideas for scalps. After that, we have news manipulation, and then I would of course look for the easy move lower. Should we not do that and go lower, then I will just have to sit it out, wait, let it do its thing, and then become clear to me where it's wanting to go, and then I can take part in that. Last week, what happened is we got chopped up here, as you can tell very easily, because it made the high low of the day, and then he just, did his chopping inside of that range and just broke everyone's backs. And then you had this move here, because all of this was just manipulation, contained price, and then finally when it was let loose, it went for a small liquidity pool here. Then you still have this larger sell side pool below, and a buy side here. Perfect conditions have been created for manipulation for an equal high rate, manipulation and distribution to the upside situation. I think we'll have a double move here. Double moves are when you have in the direction a move before to bait the early traders of that direction, and then reversal, a fake reversal, to take them out and also make them consider taking the opposite side of the trade that just got taken out. And then, of course, it just reverses one more time, and then by that time, traders, they're just too bamboozled. They've taken two losses, and they're just scared basically to go back in. That's what happens. Or some clever ones might say, I've had two losses, mentally I'm disturbed, I'm not going to go in. What's wrong with it? But with more experience, you realize that that is actually the part where it becomes easy. Now, it's already trapped those traders, and it's now finally going to run. Not always. Here, for example, that didn't happen, did it? We think, okay, yep, this is it. Oh, okay, what's this? We got taken out. No worries, we'll sell it. Oh, okay, it's good. I'm gonna buy it here the third time, but nowhere. So not always. Again, you need to have your higher time frame behind you, day of the week, you know, kind of thing. Day of the week wise, Friday closing. So we're not likely to do a big move. Okay, we would have normally at least done it till here, but it was so deeply manipulated, it just failed to even mount to move up till here. That's that. Now, like I said, higher time frames are highlighted. So just take it easy. Again, my best advice is you're taking too many trades. The best, easiest way to avoid that is just, if in doubt, don't take it. Again, Monday, London session, I'm just gonna let it play out without me. Again, New York, higher time frame. See, this is the beauty of it. If you just stick to your high probability trades and remove the low probability trash trades, you're trading less, and the ones high quality that you do take automatically improve the win rate, which will then result in you easily hitting take profit, easily getting rid of your drawdown, and just being relaxed basically about it, and letting your results talk to you. So just take it easy, okay? Don't stress, and of course, if there's anything that causes you to stress, any extenuating circumstances outside of trading, cause you to stress, which they, may do or may not do. But if should they do that, should you feel like that, the very first instance you have that feeling, turn the charts off. Okay, turn them off. You will thank yourself, or at least go to demo at the very, very, very least. Okay, My advice is just turn the charts together because you're just not thinking straight regardless. Doesn't matter if it's demo or not, you're just not thinking straight, you know? Your abilities are not going to be at their best. Turn the charts off. That's my advice to you. But yeah, you're doing good. Keep it up.